When most people look at Forex charts, they only see movement. Candles going up, candles going down, sudden spikes, sharp reversals, and they assume the market is just moving naturally. But what most traders never realize is that behind every single move, there is a force driving price, and that force is called liquidity. Because in Forex, price does not move randomly, it moves towards liquidity. And this is where most traders get confused. They spend all their time trying to predict direction without understanding what is actually pulling price. So, before we talk about entries, before we talk about strategies, before we talk about profits, we first need to understand one thing: what liquidity really is. Join now Xtreme Markets. Let's make it simple. Liquidity means money waiting in the market. That's it. It's where large orders exist. Buy orders, sell orders, stop losses, pending orders. All of these create liquidity zones. And the market constantly attracted to them. Now, here's something most beginners never hear. Price does not move simply because it feels like it. It moves because large institutions need liquidity. Banks, institutions, hedge funds, they cannot enter massive positions randomly. They need opposite orders to fill their trades. So, what do? They push the price toward areas where retail traders are trapped. Now, think about this carefully. Where do most traders place stop losses? Above resistance, below support, around obvious highs and lows. Right, and guess what that creates? Liquidity. Because all of those stop losses became orders waiting in the market. So when price reaches that level, those stops get triggered, and that liquidity became fuel for the next major move. This is where things get interesting. Sometimes the market moves in one direction only to trap traders. It looks like breakout, but in reality, it's a liquidity grab. Price pushes higher, takes buy-side liquidity, then collapses lower. Or price drops, takes sell-side liquidity, then violently reverses upwards. To beginners, it looks random, but to experienced traders, it's liquidity being collected. Have you ever noticed price keep returning to the same zone again and again? There is a reason for that. Liquidity rebuilds there. Orders continue stacking up. The market is constantly balancing buyers and sellers. searching for more liquidity before the next expansion move begins. Professional traders think differently. They don't ask, where will price go? They ask, where is liquidity sitting? Because once you understand liquidity, you stop chasing candles and start understanding intentions. You begin to see why the market moves the way it does. So, what is liquidity really? It's a hidden fuel behind every move in the market. Without liquidity, price cannot move efficiently. And once you understand it, you stop trading blindly and start seeing the market completely different. So, before your next trade, don't look at the chart, look at liquidity. Because the real question is not where price is going. The real question is, where is the market taking liquidity from? And once you understand that, you stop reacting to the market and start reading it. Join now Xtreme Markets and follow our YouTube channel